Mixed closes in both grain and livestock futures. I'm Michelle Rook with Markets Now, along with Brad Kooima with Kooima Kooima Varilek. And Brad, let's talk about the cattle complex first. We did see some pressure early in the session, but managed to close higher. Was that funds just defending their longs or what?
Well, that's my guess. The good old days, the transparency days, the 2015 and earlier days, we'd have had a better idea, when we had a pit. But that kind of was the swagger of it to me. And then this is, conjecture, guesswork on my part. But if you look at the market that is August cattle, for instance, okay, to me, if there's a segment of the market that's got more supply and less demand, it's August. We always have calves. We killed all kinds of cows, but we put all their calves on feed. And that's the slackest time of year for demand. So, when you get August leading June and October both, I go like, well, maybe it's a fund, maybe it's a computer driven type of thing, a computer that doesn't know the difference, frankly, between a steer and a heifer. So we're at a big discount. It's not a surprise. We've been discounted for a long time. I thought maybe it was the fund buying today. I didn't hear any changing in the cash. Up here, we still think cash will be fully steady at least. Show lists are very small, but of course we're trading futures. So, whether show lists are small or big, has less to do with what August cattle would be worth and more to do with what June cattle should be worth, in my estimation.
But futures are still at a discount to the cash, aren't they? And as a result, we should be pretty well supported, shouldn't we?
Maybe near record discount, Michelle. Great point. And, you start thinking about it in simple terms, like I need to think of things in. So 190.91 cash last week in the north. August cattle this morning were at 172 something for a while. So that means if the cash goes down $19, we're priced where the August futures are. Seems like a pretty big break, and it is. So it's much more difficult, I think, to break a discounted market. And the fundamental reason is because when you see this, you get current, you stay current. That's what happened in 2014. We pulled cattle forward, and we're doing it now. We've been doing it for a long time, since the high price feed of last summer, and so that, to me, cushions the break. Now, can we break a little? Of course, off record highs, but to say this thing is in one of those crash and burn modes, I don't think so at all, barring some kind of black swan that I can't predict. But otherwise, we'll pull her back a little bit in the summertime, I would guess, and then look for even better things late fourth quarter and first quarter of next year.
Boxes have been on a pretty good run here. We slowed down just a little bit at noon, but are we getting close to a top there, do you think?
Seasonally, you would say yes to that question for sure. I have been amazed, frankly, at the demand here. Don't forget the packer charges, he does this a little different than the way you and I feed cattle. When we ask for an asking price, they kind of sell it, right? But I think there's two components to that, I believe, that are worth mentioning. So last week, comprehensive beef, 11% of the beef that we produced that week went for overseas shipment. That's pretty salty for beef.
Yeah.
So I think that's a positive. And I think it'll be curious too, as we go into the summertime here, that you and I have mentioned before, that the one positive thing that came out of COVID is that it seemed like we trained a generation that, hey, you can cook a steak outside and it's pretty good. And it's maybe even better than you can buy, and you can do it twice a week or more. Now, don't forget that for what it costs to go out to eat. But Father's Day coming up, this is traditionally when this thing shifts, that the feature shifts from a middle meat, a ribeye type thing, to more of a hamburger hot dog type situation. So let's stay abreast of that. But I would think that the next couple of weeks we might see a bit of a shift in that direction.
Something else I want to throw at you as a theory. So CPI was out this morning, showed a little bit of cooling of inflation. The Dow actually rallied on that with ideas the Fed is not going to increase rates tomorrow. They're going to stay steady. Is that another possible influence on the cattle market today, or the markets in general?
I think you make a great point. I'll be the first to admit this is over my head. In terms of, that the economic nuance, but I do trade bond futures also, which is the inverse of what interest rates do. And you're right. The way this will go, and what's happened before, is you go to the point where all of a sudden the Fed says, hey, we better cool this off. Otherwise it's going to get too far away from us, which traditionally they do, which is the way markets work. They wait too long to ease, and they wait too long to to speed it up, right? So you're not the only one thinking there's a chance that we don't get this quarter point raise, or if we do, that this is the one that's it, and that'll be the narrative after it, after they have their meeting. Without a doubt, I think that, there's people that are being greatly impacted. I mean, there are real signs of economic slowdown. That's what I worry about, in terms of the cattle thing, particularly. So we get into the first quarter next year when we have much less numbers than now, much. Okay. What happens if then that's the timing? Isn't that ironic that that'll be the timing when we have the first effects of the recession, and how strong it'll be? I don't know. I guess I'll trade what I know, and it looks to me like we got to keep track of this inflation thing, but there's some components of it that are not there. I mean, look at the cost of energy. It's way different than it used to be. I don't know. You can gripe about the cost of food, but the local grocery store's got ribeyes for $8.95 a pound here in Northwest Iowa. So I don't think that that's too high.
Gotcha. So grains, new crop anyways, to the plus side here in both corn and soybeans, as it looks like we're in the trenches of the weather market, but the lower crop ratings also push this market. How much weather premium do you think we need in corn and beans at this point?
580 December corn. I think that'd be enough to get real direct with you. I didn't think we closed particularly well today, and I frankly didn't. I didn't think I thought the trade was weird today. I mean, if we're talking
we ran into chart resistance though, didn't we?
100%. Couldn't agree more. And if we were really touting the drought story, why are beans 40 higher and corn up 8? And they didn't close that way, of course. But, you don't lose a bean crop in June. No. So I don't know. You had a lot of stuff playing in that bean market today between vegetable oil and the ratings and the drier weather. But I thought particularly two of the markets there that I thought stalled badly were July corn and November beans. November beans stopped in a pretty critical chart point. I would draw a big star by the November beans if you're a hedger market or whatever, that today's highs, I think, would be important. If we get on top of it, sure, let it run for a little while. But otherwise, I think that's an area that guy could be looking at to do a little bit of marketing.
Thanks for joining us, Brad Kooima with Kooima Kooima Varilek. That's Markets Now.